This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell on Tuesday as traders weighed the prospect of higher Venezuelan crude output following the U.S. capture of President Nicolas Maduro, adding to expectations of ample global supply this year amid weak demand. Brent crude futures fell 0.2% to $61.62 a barrel by 01:03 GMT, while U.S. West Texas Intermediate crude was at $58.15 a barrel, down 0.3%. I think if the Trump playbook even partially comes to pass, Venezuelan crude oil production should increase. Should it increase, there will be more pressure on an already oversupplied market, said Marex analyst Ed Mayer.
The administration of President Donald Trump is planning to meet with executives from U.S. oil companies later this week to discuss boosting Venezuelan oil production after U.S. forces ousted its leader Nicolas Maduro. The meetings are crucial to the administration's hopes of getting top U.S. oil companies back into the South American nation after its government, nearly 2 decades ago, took control of U.S.-led energy operations there. The upcoming meetings will be crucial to the administration's hopes to boost crude oil production and exports from Venezuela, a former OPEC nation which sits atop the world's largest reserves and whose barrels can be refined by specially designed U.S. refineries.
Moving on to the top news in the energy sector.
The global oil market is likely to be under pressure in 2026 as growing supply and weak demand curb prices, and traders monitor OPEC Plus for policy signals and any attempts to bolster the market, a Reuters poll showed on Monday. The survey of 34 economists and analysts conducted in December forecast that Brent crude would average $61.27 per barrel in 2026, down from November's forecast of $62.23. U.S. crude is projected to average $58.15 per barrel, below November's estimate of $59. The poll was conducted in December 2025, prior to the U.S. military operation that launched strikes on OPEC member Venezuela and captured its president Nicolas Maduro over the weekend.
U.S. oil companies' shares closed higher on Monday, on investor optimism about potential access to Venezuela's vast oil reserves after President Donald Trump said the United States would take control of the South American nation following the arrest of its president Nicolas Maduro. Venezuela holds the world's largest oil reserves, but production plummeted in recent decades due to mismanagement, limited foreign investment following the nationalization of its oil industry and sanctions. The Trump administration plans to meet with executives from U.S. oil companies later this week to discuss boosting Venezuelan oil production, according to a source familiar with the matter. Next, we have the top news in metal markets. Gold extended gains on Tuesday to hit a one-week high, as dovish comments from Federal Reserve officials boosted bets on interest rate cuts and Venezuela tensions bolstered safe haven demand. Spot gold was up 0.4% at $4,463.63 per ounce, as of 07:22 GMT, after rising nearly 3% in the last session. Bullion hit a record high of $4,549.71 on December 26, and logged its best annual performance since 1979 last year with a jump of 64%. U.S. gold futures for February delivery rose 0.5% to $4,473.90.
Copper set an all-time high on Tuesday as supply concerns following fresh mine disruptions continued to support the rally. The most active copper contract on the Shanghai Futures Exchange closed daytime trading sharply up 4.88% at 105,320 yuan, $15,091.20, a metric ton, after setting an all-time high at 105,490 yuan a ton. The benchmark 3-month copper on the London Metal Exchange climbed 2.91% to $13,369 a ton as of 0700 GMT. It had set a peak of $13,387.50 a ton earlier this session.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures slipped on Tuesday as a weaker ringgit outweighed the strength in rival edible oils in Dalian and Chicago, while market participants awaited further leads from the Malaysian Palm Oil Board data due next week. The benchmark palm oil contract for March delivery on the Bursa Malaysia Derivatives Exchange lost 14 ringgit, or 0.35%, to 4,000 ringgit, $987.41, a metric ton by the midday break. The contract traded in a tight range of 3,997 to 4,034 ringgit per ton in the morning session.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.